Imagine having a small plastic card in your wallet that lets you shop, travel, handle emergencies, and even earn rewards, cashback, and discounts at the same time. Yes, I'm talking about a credit card. But a credit card isn't just a spending tool. It's a powerful financial weapon when used wisely. And if misused, it can easily become a trap. So today, we're starting from scratch to truly understand. What is a credit card? How does it work? Which one should you get? And most importantly, how do you use it smartly without ever falling into debt? This video is your complete beginner's guide. Whether you're a student, just started a job, or simply want to master the smart use of credit cards. I'll explain everything in the simplest way possible, with real-life examples, step by step. And yes, stay with me till the end because I'll be sharing some smart tricks and secrets most people never tell you. So my friend, don't just skip around. Watch this video till the very end, because you might miss the tips that could actually turn you into a credit card expert. And if you find this video helpful in any way, do hit that subscribe button because I'm bringing you powerful, easy to understand financial content just like this every week. One simple subscribe from you means a world of motivation for me. Fair deal, right? Now let's dive into the fascinating world of credit cards. A credit card is more than just a plastic rectangle with numbers on it. It's a powerful financial tool that, when used correctly, can open doors to convenience, safety, rewards, and even build your credit history over time. But if used carelessly, it can become a source of high-interest debt and financial stress. So, in this complete beginner's guide, we're going to break down everything you need to know about credit cards, how they work, why they exist, how to use them the smart way, and how to avoid common traps that could hurt your finances. This is the kind of video that could actually change how you think about money. Let's start with the basics. When you use a credit card, you're not spending your own money right away. Instead, you're borrowing money from a bank or financial institution with the agreement that you'll pay it back later. It's a short-term loan with a limit on how much you can borrow, known as your credit limit. Every time you swipe, tap, or enter your card details online, you're creating a balance, a temporary debt that you owe to the card issuer. Now, the beauty of a credit card is that if you pay off that balance in full by your due date each month, you won't owe any interest at all. That's right, zero interest. It's like borrowing money for free, as long as you're responsible and on time. However, if you don't pay the full balance and only make the minimum payment, interest charges start piling up, and they're usually very high, somewhere between 18% to 30% APR, or annual percentage rate. That's where many beginners get into trouble. They use the card, forget about the due date, miss a payment, and suddenly they're stuck paying way more than they borrowed. That's why understanding how interest works is key to using a credit card wisely. Now let's talk about how to get one. To apply for a credit card, you typically need to be at least 18 years old and have a source of income. If you're new to credit, your options might be limited to student cards, secured cards, or beginner-friendly cards with low credit limits. But don't worry, everyone starts somewhere, and using even a basic credit card responsibly can help you build a strong credit score over time. When you apply, the card issuer will usually check your credit report to assess your credit worthiness, basically how reliable you are when it comes to paying back debt. This is known as a hard inquiry, and it may slightly lower your credit score for a short period. But if you're approved and use the card wisely, your credit score can start going up as you show responsible behavior. Now you might be wondering, what exactly is a credit score, and why does it matter? Your credit score is a 3-digit number that represents your financial trustworthiness. Lenders, landlords, insurers, and even employers may look at it to decide whether they can rely on you to handle money responsibly. The higher your score, the better your chances of getting approved for loans, renting an apartment, getting lower insurance rates, and even qualifying for the best credit cards with premium perks. Your credit score is mainly based on 5 key factors: your payment history, credit utilization ratio, length of credit history, types of credit accounts, and recent credit inquiries. Out of these, payment history and credit utilization are the most important. That means always paying your credit card bill on time and keeping your balance low compared to your credit limit can make a huge difference. For example, if your credit limit is $1,000, try to keep your balance below $300. That shows lenders you're